All right. Hello and welcome. My name is Robert Lyon. Today I've got a really great one for you. It's going to be a bit of a long one, so grab something to drink, maybe a pen and paper, and let's get started. So today is about commercial real estate loan broker, and this is life changing, right? I'm really excited about sharing this with you guys. This has actually changed my life. The average commission on a loan broker deal is 1 to 3%. So let's say you find one deal for 100,000, it's going to be 2%. Let's say you find one for a million, it's going to be $20,000. If you look at most of these deals, they're multi-million-dollar deals, and they all need a loan broker. And the real estate agents, they make a little bit of money, but we literally just basically facilitate the deals, and we can basically get paid by just being the middleman for the lender. Very, very powerful. I'm just showing you this because these are all some pretty crazy big deals, and these are the ones that we're kind of doing. And if you just get one of these, every couple months, this could be a cool $200,000 in your pocket or more, just depending on how big of the deals that you're looking at and stuff like that. Commercial real estate brokering. And again, I'm not the all-in nerd on knowing every single thing about commercial real estate. The more you learn about commercial real estate, the further the rabbit hole goes, right? But what I know how to do is get these deals, get them to the lenders, and get paid, right? So that's what I'm going to teach you guys today on how to do this. So my name is Robert Lyon, U.S. Army veteran, funding company CEO, real estate investor, commercial loan broker. I've been doing this for a long time, and I've been in the real estate game for a long time. And this whole industry is pretty much ripe for the taking. So let's start off with what types of property can basically be financed, right? So commercial, multifamily, investment properties. So we got the bigger deals. You can do multifamilies, pretty much anything over a 5 unit that's not a residential commercial property. Big office buildings, retail stores, so malls, Starbucks, anything where they do business out of, industrial warehouses, 2 to 4 unit residentials. So like if you have a two houses or whatever, basically if you're making a profit on it, it can be a commercial deal. Even single family rent, Shake Shacks, restaurants, bars, gas stations, automotive places, mobile home parks, if you're basically renting everything out. One of my mentors, he actually bought a lot of land in Nebraska. He would turn them into mobile parks, and then he started doing more of commercial loans by helping other people basically buy land and turn them into that. It's always kind of cool. Hotels, this is big business. We have actually 2 or 3 hotel projects that we're working on right now and getting funding. We actually have a company that they are buying up old apartment complexes, turning them into or old hotels, sorry, and turning them into apartment complexes, which is pretty cool. So specialty uses, these would be, churches, schools, other things like that, medical buildings, cannabis dispensaries, things of that nature, marinas, hopefully everybody in Florida is staying safe and things. Mixed use, these are going to be your bigger apartment complexes, bigger buildings and things like that. And so when it says mixed use, it means like they probably maybe have like a shopping mall on the bottom, and then they have apartments on top. Public storage, we have one in Connecticut right now. We're trying to get built. They're looking for about 30 million, and we're waiting on some permits to get done, but they have everything set up. Assisted living, these are some big deals. These are going to be big in the future for all the boomers that are getting older. We've got one right now we're trying to build from the ground up in North Carolina. It's right next to a hospital, so that's kind of our sales pitch is like, hey, we're going to build this assisted living. It's going to be real close to the hospital. If they need anything, it's going to be able to go over there. But these are basically the gist of what we mean when we say commercial real estate. And the main thing is like you can't really do residential homes or like single family homes if you're going to like buy and live in it. It doesn't count as commercial, but if you're going to make a profit on it, then you're going to be able to use it essentially. So those are the different property types that we can do for our thing that we're trying to do. Now we're going to kind of go over the loan underwriting process. So the big thing you need to understand when you're looking at what are the loans is there's institutional loans. So institutional is like your traditional loans that you're going to do with Chase or Wells Fargo or, whatever you're going to do. So this is for the people that have good financial backing. The deal can be done with the bank. It's a very traditional way of doing it. The Alt A or Tier 2, these are going to be like your more creative deals that we have to make work, right? We have to essentially get a little creative and find some of the alternative banks that are going to be able to do this, smaller banks, credit unions, things of that nature. And then tier 3 is going to be hard money or private money or like investors and stuff like that. So obviously not as good terms and rates and stuff like that on the hard money, but they will give you the money if you need it. So tier 1 institutional, usually there's going to be either a 5-year, 7-year, 10-year, or some bridge loans will be done by the tier 1 people, but usually if you're trying to get a bridge loan, it's going to be more tier 2. All right. And these are the same things. So 5-year, 25, 30-year amortization, 30-year fixed. And we do a lot more of these because the tier 1 people, they go to the banks, everything makes sense. They make millions of dollars a year. It all checks out. And we end up with a lot of the clients that need to get a little more creative, that really have a vision, that really have a dream, or we even end up with a lot of hard money lenders. So these are just the different kinds of loans. And then there's kind of like the different tiers for whenever you're underwriting a deal, right? So if you think commercial real estate deal that they're going to buy, they have the funds, the cash flow to pay for it, everything checks out, the building is good, that's going to be your institutional bank. That's going to be your easiest ones to close. If, let's say, they're getting creative or they have a couple partners, or there's always something. Like every commercial real estate deal, I see the dollar signs and then there's just always something, right? So we usually are just going to say, hey, look, if everything doesn't seem like it's going to be perfect, we're going to go straight to our tier 2 lenders, and then maybe we'll have to go into tier 3 and we can get creative. And again, like the tier 2 and tier 3, these are usually like a temporary loan so that they can put it into the property to then eventually refinance and get the institutional loan. Okay, so that's just kind of the loan underwriting tiers. Next, we're going to basically talk about the loan process. Don't get too overwhelmed. It's pretty straightforward. And there are quite a few steps to this, but first thing, you got to make sure that the client understands what the rate is and that they're okay with it, and kind of what the process is going to look like. So this is just going to be your first conversation you're going to have with the clients. Once you tell them, hey, this is what the estimated rates are going to be, and I'll show you guys how to look that up in a minute, and they're cool with it, then you're going to go to step 2. And you're just going to get all the information. Okay, so you're going to need them to fill out the loan application. You need a rent roll. You need an operating statement, an SREO. You need their credit, preferably on all 3 bureaus. And then if it's like a ground up project, then you're also going to need the scope of work and the budget so that you can get them a line of credit for that. Costs spent to date, like how much have they invested already into the project? And then once the project is completed, what's it going to look like? What's the exit plan going to be? How are they going to get paid back? Okay, so that's tier 2. Once you collect all their information, so it's like first, find somebody who wants to buy some commercial real estate or sell some commercial real estate, collect all the paperwork. Step 3, you're going to review, make sure you have all the right paperwork, then you're going to send it off to the loan underwriter at the lenders, right? So this is just going to be, you have all the stuff, you're going to talk to the lenders if they like it, right? So we always basically send emails to a lot of lenders. When somebody says, hey, this is something we can do, you're going to hop on a call with them, you're going to go through everything, you're going to get a quote now from the lender, okay? And then you're going to basically take the quote to the client. Basically, at this time, the loan will be entered into underwriting. The preliminary loan process has started, and we usually charge a fee at this point. Okay, so you guys should charge a fee too, because just for getting it to this point, you've already done a lot of work, right? You've collected all their paperwork, you've gotten them a real offer. Now they need to pay you something, and you'll be able to take this money whether the loan goes through or not, right? Okay, once they commit and they pay, then the underwriting has actually started. This is going to be by the lenders, so you're kind of hands off now. You're not going to really have to do anything. The final term sheet will then get sent to the client. Once the client accepts it, then we're going to have to get an appraisal, one final appraisal. Either sometimes you don't need an appraisal or you'll have one already done at this point. If you've ever done real estate, sometimes you get everything locked up, you're going to go buy it, and then you go to the property and there's like a homeless person who's like burned it down or something, right? So you always got to get that last walkthrough before the deal is finally done. And then basically all the documents are signed, deal's closed, you get paid. Okay, so I know that's a lot, but this is the process. Usually, really, it's like talk to the client, collect all the paperwork, submit the paperwork to the underwriters. Once it's approved, you'll get an actual quote. You hand the quote back to the client. Client signs everything. You get everything you need. Then it goes into the final underwriting part, and you're pretty much done at that point. Like it's not really it's out of your hands at that point. It's just with the lender. They do their final through, and then you get paid once it finally closes. Okay, so that's kind of like an overview. We can talk more about that later. Next step is going to be the funding fee agreement. Okay, so you really want to have your agreement in writing and that they're going to exclusively work with you. Okay. So the funding agreement, we have it. I'll be able to share that with you guys in a little bit, but typically you're going to charge anywhere from 1% to 3%. Okay. And you want to have that in writing. And then whenever the deal gets basically closed in escrow, the escrow people are going to get the money, and then they're going to pay you out when the deal gets closed. Okay. So you're always going to want to have an agreement with the client, and then and an agreement with the lender if the lender is going to pay you out or whatever. But at the end of the day, it's like 1% to 3%. Usually it's like 1% to 2% is what you can charge. And you want to make sure you get this signed, because this is like you're ironclad that they're strictly going to work with you and that you're going to get paid. So you really want to have this in place. Once the client gets approved, or once the client agrees to work with you, this is what you want to have. Next thing we're just going to talk about is like the different loan rates. There's different rates per offer, and you don't have to know all of these, but it's just good to be able to go and take a look, right? So if it's an assisted living, average rate's going to be about 11%, right? So that's a pretty good amount of money. Max LTV is going to be 90%. So that means that you're still going to have to come in with 10% in order to do anything between less than 5 million, right? 25-year loan amortization, you can do an SBA loan as well. And you can just kind of start to look at the rates, right? And looking at the rates is going to make you more of an authority when you actually talk to the potential lender or the potential buyer, right? So you can just say, hey, right now we're seeing an average of 7 to 10%. Is that still going to work for you, right? And you're going to be looking at all these different things. So these are all assisted livings. These are for automotive buildings and different kinds of things like that. Cannabis, is a little bit higher. They're at 11%. Churches, lower, 6%. 2 to 4 unit duplexes, 6 to 8%, right? Depending on what it is. And you can kind of look at 5-year fixed, or maybe you want a 30-year fixed for this. You're going to get a little bit higher, but these are all just kind of like things that you can start to look at and start to review and start to say, okay, if I'm just going to go after commercial apartment buildings, how much is that going to be? Or what if I'm just going to look at hotels, right? So we have a couple hotels. This is actually really good. Most of the ones that we're looking at are more like 7.5% to 9%, depending on it. But it's just good to have this in your pocket and just kind of be able to say, okay, so there's different kinds of interest rates if we get different kinds of loans. So you'll start to be able to think about this and what it is that they're really looking for. Next, we're just going to look at like loan applications. So this is what you need basically whenever you have a client who's ready, who wants to fund. How much do they need, right? 27 million. Is it a purchase? Is it a refinance? Is it a new construction? Is it a fix and flip? All right. And if the purpose of the loan is something else, if it's a purchase, then you're going to fill all this out. If it's a refinance or a rehab or a construction, you're going to need to fill this out. And it's always just good to kind of look at these, because this is the kind of information you're going to either have to go with the client, or you're going to need to get this information when you're in that phase where you're collecting all the data. Okay. Annual income from the property, subject to the property, general loan questions. Have you ever gotten a bankruptcy? How long are you looking to get the loan for? Here, you need their personal information. You need to know how they're going to pay the loan back. That's all the banks really care about, is like, how are you going to pay the loan back? What are the terms of the loan that you're doing? What are the assets involved? How much money do you make? And this is just like all the stuff. Do you have any other assets like stocks or bonds? Do you have any other loans out there that they don't know about that could hurt you from being able to pay it back? And then you just need to get a credit report from them. And then you need to say, have you got any bankruptcies? Are you a felon? Do you have any other things going on? Are you in any lawsuits? Pretty standard stuff for application. And we have this stuff for you guys inside the program. But this is just kind of what it looks like. And you just need to fill this out with the client, or you need to get the information and fill it out for the client. Once you fill out the loan, then you basically also need to get the rent roll, right? And you need these documents. So whenever I first started, I would literally just ask them, hey, just give me everything you have on the property. But now I know a little bit more. So you need the rent roll. So a rent roll is basically just like, if it's a residential or if it's a business office or something like that, how much is how much is it making right now? How much are each of the rooms renting for right now? Is it profitable? What's that look like? And you'll need it for about 12 months. Okay. You'll also need an operating statement. So this will show the last 12 months of the history of the building or of the property, right? And this is just to show people, hey, this is in good health. This is making, $20,000 a month or $15,000 a month easily by renting everything out for the last 12 months. Then you're also going to need the borrower's personal financial statement. And a personal financial statement is just literally everything about their finances, like how much income do they have, how much does their business make, how many properties do they own, and all that kind of stuff. So you just need everything. They're going to get into it with you because you're buying a big property. They're going to lend you the money, but they need to see what your finances look like. And then they also are going to need a schedule of real estate owned. So this just means, does the borrower or have any other properties? What else does that look like? And then you're going to need a credit report on all three bureaus. So these are the things that you'll need though from the clients. Okay. So in that collecting of the paperwork phase, you're going to need the rent roll, operating statement, personal finance statement. If they own any other real estate, what real estate do they own? Give us that. And then their credit report. Okay. And if their credit report isn't very good, then they're probably going to need credit repair before you can move forward. Okay. So these are the core loan types. Okay. So there's long-term permanent loans, short-term bridge loans, rehab loans, new construction loans, and then there's SBA loans. Okay. So these are the main ones. So whenever you're talking to somebody about their commercial property, you should be able to break it down into which type of loan is it that this person's going to need, right? Are they buying an apartment complex? Okay, they're probably going to need long-term, or they're going to need a short-term bridge loan, and then they're going to build it and refinance it. Is it a fix and flip? Okay, they're going to need a rehab loan. We're going to look at those. Is it, do they own the land and they're going to build a storage unit on it? Okay, you're going to need a new construction loan. Do they currently want to buy a new office building? Okay, those are going to be more or less for the SBA loans or something along those lines. And we're just going to kind of dig into it. So there's conforming loans, like we already kind of talked about. These are going to be your institutional loans. These are going to be the ones that they check all the boxes. The bigger banks are going to just do it and it makes sense. And then there's non-conforming loans. So this is going to be that tier 2, which is alt A and hard money loans, like we talked about kind of in the beginning. So the long-term permanent loans, these are going to be multifamily, commercial, permanent provided, stuff like that. So the purpose is to stabilize income producing properties. So this is going to be apartment complexes, businesses, offices, multifamily, storage units, things like that. This is the typical loan size from 100K to 100 million. Here's kind of the breakdown of like the different terms. You can either do a 5-year all the way up to a 30-year. Most of the people are going to be looking for this 10 to 30-year. And then sometimes they want a little bit of wiggle room, right? They don't want to be locked in for 30 years, but you're going to get better rates, obviously, if you do 30 years. The rates depend on which size of loan you're going to do. Max loan to value, 5+ units is going to be 75 to 80%, which this just means that the lenders will pay for up to 80% of the loan, which means you're going to have to bring in your own cash or your own assets to cover the additional 20% of the property, right? And then same thing for commercial LTVs, debt to service ratio is 1.2. Prepayment. So sometimes there's prepayment penalties. Like sometimes you'll get locked into a 30-year fixed long-term mortgage. And then like if you want to pay it all off by year 25, you're going to have to pay an early termination prepayment penalty. So you got to look out for that. Average payout, 0 to 2% for these deals. So that's how much you're going to get paid. Basically make sure closing time frame, how long is it going to take to close? Usually it's going to take 45 to 60 days. So like I've talked to most of you guys, like if you really want to do commercial deals, you really want to have that steady credit stacking client, steady business loans first, so that you're making, some money every single week. But then you get a couple of these in the pipeline. And whenever these hit the bank account, it's like, boom, a lot of money is going to hit. You'll need full appraisals of the property. So always remember, you're going to need that. You're going to need down payments sometimes. For most of these deals, they're going to need to come with a down payment. So not very often, unless they have some assets that they can do, or the property's already cash flowing and they just get it for a really crazy discount, will they be able to do that? Customization. This is if you have any other additional assets you want to add on. And then you got to have reserves as well. So you want to have like enough money to pay back the loan for 6 months. That's what the banks want to see. So it's like if the payment is going to be, 20 grand, then they want to see that you have like 20 times 6, or $120,000 in your bank account for reserves, just in case something happens. Permanent financing. All right, I think that was pretty good. And then we'll also look at the next one, which is more of the short-term bridge loans. I'm just going to kind of run through these, but I want you guys to have an idea about what each of these are. So a short-term bridge loan is about 12 to 36 months. And usually these are for, fix and flips, or if you're trying to build something fast and then it will start making more money, and then you can refinance it and get one of those permanent loans. So these are usually same thing, but the only difference between these is they're usually a little higher interest rate, and they're usually for short term, right? They're 1 to 3 years. So the people want to get their money back pretty quick. And this is like for, let's say you can buy a property, fix it up, and then refinance it. And when you refinance it, you'll pay back this loan fast. So these are kind of like those typical loans. You can make more money on these as a broker. So instead of 1 to 3 or 1 to 2, this is a 1 to 5%. So these are really good for your guys' pockets, and they're usually a lot faster to close as well. So they don't have to do as much due diligence and digging on these ones because it's a shorter term loan. It's not like they're, with the long term, it's like the bank is basically getting married to the property. With these, it's like a short term, quick relationship. So it only takes 7 to 21 days to close. You will still have to get an appraisal usually. Down payments are sometimes necessary, not as much as with the long-term loans. Does not require cash. I've seen that they do require cash, but yeah, so for most of them, they don't require cash. It just really kind of depends on the deal. I think you guys kind of get those. Those are kind of quicker cash, short-term loans. And let's talk about construction loans. Okay, so these are for like ground up and rehab construction. So this is going to be your, people who buy houses, people who build apartment complexes, and basically construction loans are pretty quick. They're going to be kind of fixed. You can get the 1 to 3. So the plan would be you already own the land, you're going to buy, you're going to build it up, and then you'll refinance it. So that's going to be kind of your ground up. And then also your rehab is going to be up to 150K. So rehabs, like anything less than 2 million, I really like to, for fix and flips, we use RCN and a couple other people. And they're just really good, and you can make some pretty good money on them. So the required documents for these, you're going to need a resume or track record. So they really want to see that you have some experience. Typically, the lenders don't like to be the first person to lend you. So like a lot of times, if somebody's trying to do this and it's their first one, they'll usually want to bring in a partner. They'll want to see financial statements, the scope of work, right? So the scope of work is like, how much is it going to cost? How much are the employees? How much is the property? How much is the materials? And a budget for that. And then, yeah, again, track record again. So track record is really important for these. So if they've never done one of these before, it's going to be a little bit harder. You can still do it, but they'll probably maybe need to bring some money to the table. It's either bring money to the table, bring experience, or have a really ridiculous deal that the lenders see is going to be profitable, right? So this is really cool. Construction loans are big money for everybody. SBA loans, we do SBA loans. It's a lot of paperwork. Lately, I've been seeing the government really wants a lot of collateral. But whatever, SBA loans can be on a national level. The reason people like SBA loans is basically the government backs like 70% of the loan. So if you get approved by the SBA, then the lenders are much more likely to give you the money because they know that the government has backed the loan, right? So they're not going to lose their money essentially. Okay, so almost all SBAs are going to be guaranteed though by your personal credit and everything. They're good for venture capital programs. SBA loan 7. So this is a specific loan that you can negotiate between the government and you. You can borrow up to $5 million for the SBA loans. There are fees and penalties, and you got to make sure that you kind of know more about this. This isn't a video on SBA loans, but I just want you guys to know what these are about. I have a whole podcast actually where I just did with an SBA lender, so you guys should definitely check that one out. I'll put a link to that somewhere. But eligibility, so like the big thing with the SBAs is like they don't do it for if somebody's going to be sleeping in the property, right? So you can't do it for really apartments or like residential property. It has to be somewhere where it's making money, it's a business, and it's basically just for businesses, right? So yeah, business owner must occupy 51% of the property. So this is what they're kind of good for: self-storages, office buildings, warehouses, raw land, stuff like this. So I hope you guys have a good understanding of what commercial real estate is. Maybe I was too much information, but now I want to pivot into how do we make money with this, right? How do we actually make this happen? Because it seems like a lot at first, but at the end of the day, you're just finding people that want to buy commercial real estate or sell commercial real estate. You're collecting their information and you're sending it, flipping it in an email to the lenders, right? And then once the lenders approve it, you get paid big stacks. And this can be like, you can do this part-time, you can do this full-time, you can do it all. But the main way is like, how do we actually find these leads? How do we get these people? How we currently are doing it, full transparency, is we have a lot of partners. So we have a lot of just B2B connections, and they send us commercial real estate deals. So we have become our own lead or origination source, right? So that's what we're doing. We have a lot of other marketing methods that work as well. I'll probably have to do another video just on marketing, but Facebook ads work. LinkedIn is working really well for this, but this is how you can do it more in the organic sense, where you're able to just find them. So you're going to go to websites like loop.net, and you're just going to basically be able to pull these people's information and find out, hey, do you have any other properties you want to sell? Are you looking to refinance? What's going on with, but you can find deals like this, and then you can basically get a hold of the owner of the property. And we're going to go over the script in a second, but there's a couple of great websites. So loop.net, and you can start to look up different kind of properties that are for sale. But these are the hottest leads you're going to get, because you're going to be able to call them and you're going to be able to talk to them about what kind of properties you have. And you can also, there's tools that we have. Dripify is actually one. You can scrape commercial real estate leads. You can pay people on Fiverr to go through these. You can basically take the name of an LLC, you can put it into here, or you can take the address of the property, you put it into this little website called thatsthem.com, and it will tell you who is the owner, what's their phone number, what's their email. Another one of these is called Open Corporate. So you'll be able to put their business address in here and you're going to get the information. I would recommend getting anywhere from 500 to 1,000 for your first batch. And don't buy leads. Have somebody scrape these, because buying leads are all trash. But you can literally just go to like LoopNet, Crexy, and then I think I have another one on here. And then you just basically scrape whoever is selling and buying these properties, right? So get a list of about 1,000, and then you basically are going to text them, you're going to email them, you're going to call them. And the reason that these are such warm leads is because we know they are selling the property, because it's literally online. Like, it doesn't get warmer than that. Like, that's the warmest lead you can possibly get, because you actually have a reason to call them. Be like, hey, I saw that you're selling your property. Just wondering if you're looking to refinance, or if you have a buyer, or just kind of what you're working on right now with it. Right. And they need your help, because you can help get them the money. You can basically tell them, look, I have a lender that can help you get this done if you can't find a buyer. And if they say, yeah, I need help selling it, perfect. Now you have them sign a contract with you that you're going to exclusively find them a buyer. And now you're kind of like a commercial real estate agent, but you're really just mostly trying to be the lender, right? You kind of just want to be the middleman who makes things happen, right? And a lot of these people, they're buying up as much properties as they possibly can, especially right now. So Grant Cardone is blowing people up about buying apartment complexes. A lot of the baby boomers that bought a lot of this commercial real estate, they're strapped for cash right now, and they're really trying to either sell their properties or refinance their properties, and you have the solution to help them do that. Okay. So that's kind of like the big way to find hot leads, aside from posting in Facebook groups, doing LinkedIn automation or Facebook ads. But you basically go to loop.net, commercial Crexy, you focus on the sellers, and you basically let them know what the rates are and what options they might have. You scrape their information, and then you use tools to basically call, email, text, and you can get these people on the phone regularly. And this can become, part of your daily routine, and you get one or two of these deals, you get a commission of up to $200,000 or $500,000. Like, that's life-changing money just from spending a little bit of time focusing on the right kind of people that have what you have, and you're solving people's problems. So very, very powerful. So here is the 30-second pitch of what to say when you call these clients. Hey, John, how are you? My name is Robert. I'm a commercial advisor of Financially Abundant Lending. I was out in the marketplace recently, and I came across your building at 800 Fifth Ave. With the federal prime rate currently at 4, rates are still looking pretty competitive if you're considering refinancing or maybe even purchasing another property. I'd love to talk to you. What are you currently working on? Okay, and this is like establishes you as an authority. This is introducing you as what you do. And this is your 30-second pitch. Hey, my name is Robert. I'm a commercial loan advisor, Financially Abundant, and I'm calling about your property. It looks like the current rates of the market are about 4% or 8%, which means it's really good time that you can maybe still want to refinance. But I'm just kind of curious, what are you working on? Okay, so you introduce yourself, you establish yourself as an expert, and you basically just say, what are you working on? And you open the dialogue. So you have a reason now to talk to these people. and you have a reason now what to say. And literally, when you start saying, what are you working on now? They're going to be like, what are you talking about? I'm talking about your property that you have for sale. Oh yeah, well, we're trying to sell that. We've got a couple offers, nothing really serious. We do maybe want to, if we can't sell it though, we're definitely going to need to refinance it, right? And then as soon as you hear that, you got it. You got them in the bag. Okay, cool. Well, if we refinance it, I'll be your go-to lender. I can get you the loan right away. I can get you some rates if you're interested. If you do have a buyer, I'd be happy to, find the best deal for you. So you're not married to the lenders, which is nice because a lot of people that they talk to are married to their lenders and they're stuck. You can actually go and find them the best interest rate possible if they're interested. So that's kind of your sales pitch. So again, here's what you do. One of the best ways to build trust with your clients is to get them basically an answer quickly. What about your financing? What are the rates? Okay. By providing them with the rates, you're going to be able to tell them exactly what it is. Okay. So for prime rates right now, it's 8%. So this is as of yesterday. For 5-year, it's 4%. For 7 years, 4%. 10-year, depends on what they're doing. Okay. But you can basically call people and be like, look, the regular rate right now is about 4.83. It just went down. You can use the news as well. So if you're looking to refinance or sell, I think we could be a great time, and I'd love to help you. I'd love to get into it, and we'll be able to make this happen. So just knowing this is a great way to have yourself as an expert, because who calls somebody and tells them the exact prime rate of whatever the commercial real estate is in right now? Like, this is a great way for you to establish your foothold. Hey, I'm calling you about this property. The prime rate is, about 4.8. I'd love to know if you're interested in maybe refinancing or what you're doing to try and sell it, or if there's anything I can do to help you. But what are you currently working on with this property? And then they'll tell you all their problems and you'll be able to help them. Very, very cool. So learn, memorize your pitch, and basically be able to just help people get what they need to do. As a correspondent commercial mortgage lending company, Financially Abundant leverages our strong long-term relationships with all sources of capital, including Fannie Mae, Freddie Mac, FHA, life companies, bridge lenders, banks. We structure our packages and prices and loans, which are simultaneously underwritten across multiple institutions and private capital partners. Our lenders meet, beat, and counter offer our asking rates and terms, ensuring our clients attain the best financing available through a competitive building process. We assign our brokers and loans to be competitive. So we offer more loan programs than any other single lender in the country. So that's really what you want to say. We offer more loan packages than any single lender in the country. Very, very cool. Now let's just talk about kind of like the marketing scripts and just kind of how you're going to basically talk to these people. So a lot of the marketing you can do is going to be voicemails, emails, texts, cold calls, whatever you want to do. But like the voicemail, hey, John, Financially Abundant Lending. Hope you are well. The federal prime rate is about 4.8, so this is old. The conventional non-conforming rate are looking good. If you are considering refinancing or purchasing a multi-family commercial or investment property, I'd be happy to go over some loan programs and rates with you. Please give me a call at blah, blah, blah. Have a great day. So you can literally scrape all of the people's phone numbers off of LoopNet, and then there's software out there that you can use to basically drop voicemails onto them. I haven't seen as much success with the voicemails as I have with texting and email, but that would be basically what I would go to. So you guys will get access to all these later on, but you want to keep it simple. You want to basically make it all make sense. Here's the email loan that we use. Here's the text that we use. I'll drop this off again inside of school for you guys to basically use. And you're just going to go like, are you looking to refinance? Are you looking to purchase? What's the purchase price? Do they need any construction? Do you need anything else? So on and so forth. Refinancing cold call. Hi, Dave. This is Robert at Financially Abundant Lending. How are you? That's great. The federal prime rate is about 5%. Conventional and non-conforming are looking great. If you're considering refinancing or purchasing a multifamily commercial investment property, I'd be happy to shoot over some loan programs and rates with you. That looks good, blah, blah, blah. So you can kind of go through this though, and you'll be able to basically start having conversations with these people. And it's very simple. It's like anything else in real estate. What are you looking to do with the property? What are you trying to sell it for? What kind of solution? How can I help you? Right? See what you can do to help them really get there. So now I just want to go over the action plan to really make this happen. So this is your 30-day roadmap. So learn the basics of commercial real estate, right? Really just kind of understand the different kind of loans that we went through, understand the different kind of offers that you can do, find property owners. Okay. So you can literally spend some time just looking through here, finding ones that are in your area, finding some sort of location that you just want to dominate, right? Really figure out what that's going to be. Research and connect with referral partners. Okay, so this is going to be like your B2B connections, like I told you that we do. This is going to be great if you go to like business conferences, real estate meetups, online Facebook groups, online LinkedIn profiles, and things like that. Complete the top 100 building prospects over the phone. So get a list of 100 of these guys, call them all, see if they're interested, see if anybody's open to it. Then also find 100 prospects that might be your B2B partners, people that might be able to refer commercial deals to you, and then maybe originate 1 or 2 loans, right? I guarantee if you get 100 of these people on their emails and their phones, you're going to get 1 or 2 deals. If you get 100 B2B partners, I guarantee you're going to get at least 1 or 2 deals out of that. And again, the commissions are big on this, guys. So this is not a waste of your time. This is very, very in the realm of making you a lot of money and spending a lot of time doing this. And that's going to be kind of like your main focus, though, like the hands-on approach. The best way to learn hands-on is to simply do the work for a commercial loan advisor every day. You're going to basically talk to us and try and find at least 1 to 3 deals within the next 90 days, right? And that could turn into anywhere from 50 to 300,000 to $900,000, right, into your pockets if you really take this seriously and you really kind of learn more about this. And the main thing is like, first, you're just going to scrape all your leads. You're going to like focus on an area, pick your market, scrape all the leads that you need. And then you're going to basically make sure you have the lenders in your pocket. RCN is good. We have a whole list of commercial loan lenders that I'll be able to get you. And once you know what those kind of loan brokers do, you're going to be able to help them out. And then you're just going to cold call. You're going to text message. You're going to set up your LinkedIn marketing. You're set up Facebook ads, and you're going to really just blow this thing up. Okay. So week 1, you're just going to study, make your business plan, do some research, learn the different types of loans, set up your profile, say that you're a commercial loan expert, identify where you're going to target your graphically. Identify the top 25 buildings that you're going to work on, and really just kind of like pick out where you're going to focus. Start talking to people, start getting out there, start working with people, and really just get this thing going. Okay. Week number 2, you're going to start looking over your contracts. You're going to start doing research, and you're going to start prospecting. Okay. You're really going to start talking to as many people as you can. You're going to understand what the process is going to be. You're going to make sure your email looks good. You're going to make sure your text messages look good. Your social media profiles look good. And you're just going to start really reaching out to as many people as you can. You can start contacting other realtors. A lot of local regular real estate agents, they don't know what to do with commercial loans. Okay. So when they get some commercial opportunities, you can be their go-to person who's going to basically send you deals. So you're looking for property owners, you're looking for people in the industry, you're looking for other loan officers that might be able to send you some difficult stuff. Then week 3, you're going to keep contacting your prospects. This is going to be very outbound focus. This is going to be very talkative. You're going to basically make things happen, and you're going to basically blow everybody up until you get a deal. Week 4, continue. And by this week 4, you should have at least 1 to 3 deals, if you really focus on this, and then you have some in the pipeline. So again, create your business plan, pick your target. What are the 3 cities that you're going to go after? Pick what kind of properties you're going to talk to. Are they going to be apartment complexes? Is it going to be hotels? Is it going to be vacant land? Is it going to be storage units? And then you're going to figure out, okay, what's your income goals? Yearly, monthly, target how many loans you need up to hit a month to make that monthly, and then to make that yearly. How much is your average deal size going to be? What are your commissions going to be? Multiply your average deal by 1%. And then how many deals do you need to get closed monthly? Right? Okay. How many deals do I need to get closed? Number of deals, target of contacts within the next 30 days. How many people do you think you have to talk to hit that number of deals? How many property owners, how many referral partners do you need? And then you're just going to have to need data, right? So you're going to set your goals, though, for how much you really want to make, set them. Maybe you don't know what the hell you're doing, but then now you need to get data. You're going to take action on your plan, okay? You're going to contact us, or we're going to help you do all this stuff. We're going to show you how to get these commercial leads. We're going to talk more about this as well. We're going to go over the different marketing strategies that we have. Like I said, LinkedIn is really powerful. Cold email, cold calling, cold text is really powerful. And just make this into a system. Have somebody else going to LoopNet, going to these different websites, getting all the data, putting them into your CRM, and then either you're going to call them, or you're going to hire an appointment setter, you're going to find somebody, or you're just going to write emails and texts. I'm not I love cold calling, but I'd rather just be able to click buttons and, wait for people that are actually interested to book with me. So we have lots of ways that we can do that. You're going to create a daily prospecting journal. This is if you're serious, right? You're going to really focus on the property owners. How many conversations did it take? How many loans did you have? How many conversations? And then you're also going to talk about your referral partners. Like, it's not just you. It's not about just like, it's like not what you know, it's who you know, right? So if you find a few really good referral partners, that can be millions of dollars for you. That could be tons and tons of business just by meeting one person who can connect you with the right kind of loans, with the right kind of properties, so on and so forth. And then this is kind of the information you're going to need whenever you do it. Building numbers, LLC, so on and so forth, email script. All right, so that's going to be your roadmap. Hope that was helpful. And that's your 30-day action plan on commercial real estate. And we'll do another one of these just on marketing and dialing in the system. But I hope this kind of added some value, and I hope you guys learned something from that. You can guys hold the applause. I know. I think that was cool.